The history of adventurous enterprises dates back to ancient times. Throughout history, there have always been individuals willing to take risks to accumulate wealth for themselves. Traders and explorers set off to uncharted lands in search of wealth. Most of them are gone forever and forgotten in history, but those who managed to conquer new territories multiplied their wealth many times over. Those who believed in their cause always went along with the adventurers. Those who weren't ready to dive headfirst into a long voyage, but were willing to invest their time and resources into making it happen. Investor. Not much has changed since then. Adventurers and investors still shape the face of the modern world. Part 1. The main thing is risk. Once again, we're talking about investments, startups, and venture. These words are often mentioned in headlines or stories of successful companies. But do you know how the world of startups and investing in them is structured in reality? In the 21st century, wealth is being created. How cryptocurrencies have changed the fundamental vision of the product, and why now everyone has access to tools that ordinary people couldn't dream of 10 years ago. Today I'm gonna tell you what venture investing is and why risk is a good thing. First, let's start with what the heck is obscured by venture after all. In English, this word means some kind of adventure, risk, dangerous adventure, or venture. The whole point of venture investing is reflected in the very meaning of the word. Concours are involved in the most promising and risky type of investments. These are investments in startups. Part 2. The history of startups and a call to create your own company. A startup is a venture based on a particular concept that necessitates financial support to materialize. The term startup emerged relatively recently, although the concept itself is not new. Startups have existed since the emergence of commodity money relations. You can include adventurous corsairs and trade missions to India, which set sail from the port, knowing that half of the ships would not return. Back in the day, people from all over the world flocked to the American frontier to find a new life and make their fortune. Thanks to their efforts, the US has achieved its modern economic success.
Solely the notion and a minimal set of resources for its validation. Several ideas concluded in failure, but another segment constituted our world as it is at present. Being a startup founder is a heavy and complex burden, however, as Y Combinator founder Paul Graham wrote,
"Now is the optimal moment to construct your own fortune. It's impossible to become rich by working many years in a corporate position. You can become rich only by doing something very valuable for society." A startup is an opportunity to exchange 40 years of peaceful life for an average job without incentives and challenges for 4 years of entrepreneurial activity, during which you will earn yourself a fortune. Who do you consider yourself to be? Are you one of those who are willing to work for a salary for decades? With those who are prepared to seek everything to accomplish something great? Or perhaps you desire to be the individual who assists founders in doing something great. To become a venture investor. Part 3. Already invested. In this world, not everything is simple. The spirit of adventure, brilliant ideas, and confidence in success are not enough to create a successful company. You also require money for this. Typically, companies approach the bank and obtain funds on credit from there. But it's not all that simple.
lend their own funds to companies as collateral. But where can young enterprises attract investments? Because at times they have nothing but an idea. And as we are aware, an idea is a poor form of collateral for a banker. So they have to look for other ways of financing. There is a common concept called friends and family.
These individuals are your close friends and relatives who are content with your idea and reputation. those who had faith in your company and contributed a small sum of money for its development. This is the earliest withdrawal of funds. Everyone went through him from Google to Amazon. Throughout the majority of history, startup investors have been just as adventurous as their founders. They were lone wolves in search of wealth and success, more like friends and family rather than big capital. Part 4. With the new era, everything has been transformed. From the latter half of the 20th century, everything changed. Investing in startups has become commonplace. The sphere began to develop and scale rapidly. True experts in the field of venture investments have started to emerge. This venture evolution happened thanks to a change in the very paradigm of economic development. There are technological items that can be distributed nearly for free to virtually any number of individuals. A product similar to a social network for user communication, like Facebook, software for various industrial tasks, such as IBM, an information search tool, like the Google search engine, and many more. The primary advantage of technological products lies in the fact that it is sufficient to create such a product once, and after that, it can be distributed without incurring any additional costs. Tech products, digitalization contribute immensely to the development of society. Digitalization is the process of transforming analog data and workflows into a digital format, and these products can be produced by the endeavors of only a small number of skilled experts. The cost of creating and reproducing a technological product has become disproportionate to its value for society, and people with money saw this. With the emergence of tech startups, it became clear that out of a mere $100,000 investment in a talented team, you can make $1 billion. This has become a widespread phenomenon. The economic growth has become exponential. Now, with the development of crypto in EP3, we continue to move further into the world of digitization. We've learned how to secure property rights and financial independence using code. This led to the emergence of a whole sphere, not directly linked to the physical world, but impacting it. What can better describe our society than this? In our videos, we talk about how the world of cryptocurrencies is structured. Make sure to subscribe to our channel and turn on notifications so you don't miss any future videos. Part 5. How modern venture funds operate. Typically, funds invest not their own personal funds, but the funds that limited partners, or as they are also known, investors, invest in them for the purpose of generating returns. Any individual investor has the opportunity to invest their money in the fund and receive regular income from it. This could be an individual person more often than large traditional enterprises who want to participate in investing in startups by allocating a small portion of their funds for this purpose. During the company's entire life cycle, it consistently attracts investments as each new stage of growth necessitates the requirement of additional funds. According to this, funds classify transactions into several stages. Pre-seed, the earliest stage with minimal investment. At this point, the most common investment is not in the product, but in the team, although this is partly true for any stage. At this point, the product requires to discover its position in the market. Seed is the stage at which the expansion of a young startup begins. Usually by this point, the idea has already been tested and work begins on creating the product and marketing. Late stage. This is a series with A, B, C, and so on. This is a supporting stage that enables the company to continue growing. Typically, it occurs during the stages when the product's value is already apparent and there exists a user base. Part 6. Risk. After considering all the success stories, you might be under the impression that venture capital is a simple and effortless means to achieve wealth by capitalizing on the efforts and sacrifices of company founders. Because anyone could see the potential of Apple, right? Actually, it's not as easy as it seems. Let's take Y Combinator, the cradle of modern venture investments. Since 2005, they have managed to invest in over 4,000 startups. Alumni, Stripe, Which, Airbnb, Dropbox, Reddit, and more. Familiar to all of us coins have emerged from similar examples from this accelerator. Base, OpenSea, Filecoin. Only Airbnb worth over $100 billion now, thanks to them solving the problem of convenient accommodation booking worldwide. Currently, it appears that anyone has the potential to perceive this opportunity. Envision yourself in the year 2008. Two young entrepreneurs approach you and discuss an application they're developing, which enables you to invite unfamiliar individuals to reside in your residence. Is it possible for such an idea to actually grow into $1 billion? Individuals will never begin collaborating to create rooms in their apartments with people they don't know. This apartment is way too private. And to these young enthusiasts, the regular ones would respond with experienced investor, get lost. Ultimately, they ended up being incorrect. That is one of the main characteristics of venture capital. It is insufficient to merely analyze current markets effectively. You always have to keep in mind that there are numerous new and unexplored avenues available for the development of blue oceans that have yet to be explored. Here's an interesting fact. By 2018, over 1,600 startups had gone through Y Combinator. Only one startup generated 1/3 of the profits from all investments. 2/3 of the total portfolio's capitalization is made up of the top 5 companies out of 1,600. This implies that only 0.3% of the companies in which Y Combinator invested generated 2/3 of its profit. An astonishing 9 out of every 10 startups ultimately end up failing. 50% fail within the first 5 years of existence. 60% of startups don't make it to Series A. Here, like never before, the Pareto principle is at work. 80% of the result comes from just 20% of the effort. That's why funds usually place bets right away on multiple companies, sometimes even competing with each other. In a similar manner as the merchants did in our introduction, a large number of ships were sent on the journey, and even if only one of them returned, it more than made up for all the expenses, surpassing them many times over in terms of profitability and financial gain. Part 7. What is new in the venture industry at the present time? We already know that modern technology measures cannot be imagined without the support of venture investing. A bunch of big companies like Tesla, Microsoft, and even OpenAI have somehow or another received venture funding. You can't imagine the world of cryptocurrencies without it. Their invention changed the fundamental essence of investing and the principles of product perception. Tokens, NFTs, decentralization, these are buzzwords that mean virtually nothing to the majority of individuals. Most of the time, it is just noise that can be sold to the public. This is a real game changer. And to my friend, in the past, it was only possible to invest in proprietary companies with a product that they own and can generate income from. Nobody saw the point of investing, for example, in Linux, because it seemed impossible to make money on open source software. Taking into consideration the fact that it is presently the 3rd most popular OS globally, no one is deriving any financial benefits from it. Just imagine the substantial amount of money that early investors would have made in it. What is the potential amount of money that early investors could make in the internet? Sounds like gibberish. How can you even invest in the internet? In a manner of speaking, cryptocurrencies have made it possible. They changed their approach to monetization and product ownership. Cryptocurrencies are a game changer in the world of investing in open protocols in open source code. Before cryptocurrencies, it was unimaginable for someone to invest $200 million into the Optimism protocol. His entire code is literally available to anyone who wants it. He already had several billion-dollar companies built on him. And this not only does not decrease, it even increases the value of its original solution. Tokens allow you to extract financial value from a product, even if it doesn't belong to anyone. This ain't no Akitian rights. It's just some cryptic code that, by social agreement, represents the values of product success. Tokens enable you to quantify the value of any asset to society. Due to this, we are able to listen to a success story. For instance, investments from Paradigm, already covered in their vid. They've already made billions of dollars on the protocol. They witnessed a revolution. In the year 2020, the fund invested a total of $2 million in the Flashbots team, who developed a toolkit that is currently being used in all Ethereum nodes. In 2023, after 3 years, they raised a new round for Flashbots with a valuation of $1 billion. The best open protocols existed only through donations and the support of enthusiasts. But now they can be developed with support from big capital. Cryptocurrencies are driving technological development and the growth of open, free protocols, once again changing the principles of value distribution in society. And this applies not only to the principle of distribution of values, but also to investment accessibility. Never before in history, individuals have had such access to direct venture deals. You always required a large amount of capital, had to possess a loud fund in order to take part in deals. The government sets up a lot of barriers, and the bureaucratic world only favors its own. Cryptocurrencies are significantly more democratic when compared to traditional companies and startups. If you've always wanted to dive into the world of venture and even participate in deals, keep an eye on our CHOLY resources on Telegram. And also our new channel, Demetus, where we participate in rounds ourselves and tell you about the ins and outs of the crypto venture world.
Venture is primarily centered on social capital, visionary founders, investors, and passionate enthusiasts. We are pleased to create a community of individuals like this around us in order to provide something fresh to the world. We have something to offer to each other. Fill out the form located in the description and join us.